This podcast is solely for the attention of institutional, professional, qualified or sophisticated investors and distributors.
Hi everyone, and welcome to this new edition of 5 Minutes to Know Your Way Around, where we are going to talk about the ECB Governing Council of February 2022. Before starting, let's recall the backdrop that prevailed at the time of this council. Headline inflation for January had just come out at a new record since the creation of the Eurozone, at 5.1% year-on-year, largely due to energy prices, but not only. And the unemployment rate in the Eurozone has fallen to 7% of the labour force in December, which is the lowest level since the creation of the Eurozone. It should be noted that the unemployment rate for December 2021 is therefore below the unemployment rate projection of ECB economists for 2022, which is 7.3%. So, in the same time, inflation at its highest level and unemployment at its lowest level since the creation of the Eurozone. So, if we come back to the ECB, we could have the impression that nothing would have changed by reading the press release on monetary policy decisions, since this press release remains almost unchanged compared to December. On the contrary, Christine Lagarde's press conference showed that a lot has changed. First of all, there is much more concern about inflation in the Council after the December and January inflation prints, which surprised strongly on the upside. The Governing Council now considers that the risks to the inflation outlook are tilted to the upside, especially in the short term. And unlike December, the mention that inflation will subside gradually during the course of 2022 has just disappeared. The wording is now much more cautious, as the Council expects the energy price dynamics will moderate this year and that price pressures from bottlenecks in supply chains are likely to dissipate during the year. Lagarde clarified that concerns about inflation are unanimous in the Council. And last thing about inflation, the element, and maybe the only one, that is holding the ECB back from normalization is the fact that wage growth remains very subdued. Now, if we focus on monetary policy decisions, the whole sequence of 2022 is put into play. In December, the ECB had indicated that the PEPP would stop in March, that the monthly purchases of the APP would be 40 billion in Q2, 30 billion in Q3, and 20 billion thereafter. The Council has left this program intact for this time, but it is now very obvious that it will be rediscussed with the new set of economic projections at the March 10 Council. When asked if she maintains that a rate hike was very unlikely in 2022, Lagarde hinted that the situation has changed. So the door is now clearly open for a rate hike in 2022, but Christine Lagarde also insisted heavily on the fact that the sequence stopping net purchases of securities, raising key rates, still held. One could therefore imagine an announcement in March of the end of the net purchases in Q2 or Q3, with a possible rate hike towards the end of the year. Obviously, the member of the Council will try to specify the timetable in the coming weeks. A particularly important point in the backdrop of a possible stop of asset purchases earlier than expected concerns sovereign spreads, since it could lead to a widening of the spreads. Here, Lagarde was careful not to repeat the mistake of March 2020, when she said that the ECB was not here to close the spreads. And she made it clear that the ECB would use all the flexibility of its tool to avoid a widening of the spreads. A way to signal that the ECB is not here to close the spreads, but at least to prevent them from widening too much. Obviously, this will be tested on the markets in the coming days. The minutes of this council will be published on March 3, and the next council will take place on March 10. Thank you for listening, and talk to you soon.
All comments and analysis reflect CPR AM views on market conditions and its evolution, according to information known at the time. As a result of the simplified nature of the information contained in this document, that information is necessarily partial and incomplete.